Welcome to AgTech Talk by AgriBusiness Global, where we explore the cutting-edge technologies and global crop protection industry. I'm your host, Lauren Milligan, content specialist for AgriBusiness Global. In today's episode of AgTech Talk by AgriBusiness Global, we're going to be joined by Bob Trogele. We're going to be unpacking a little bit about what's driving and what's stalling investment in ag technology, especially within the crop input space. Bob, I'd like to get started with talking about how the ag tech investment has evolved over the past few years, particularly in relation to ag tech involved in the regenerative ag practices.
Well, first of all, good morning, Lauren. Thanks for having me. Right now, some of the trends I'd like to maybe offer up are overall, the ag tech investments represent about 2.5% of all venture deals. And that's 1.64% of all venture dollars. And the ratio for one exit, there are about 14 investments. For Q2 here, recently looking just what's happening currently in the market, there were 149 ag tech startups raised about $1.55 billion, but that's a 16% decline versus Q1 2025 and a 20% decline in deals. There were 11 exits, mainly through acquisition. So that's kind of what's happening. So there's money out there and there is activity out there. But if you look at it on some of the general trends, there are smaller deals. There's a lot more bolt-ons, a lot more ventures, meaning joint ventures in the spaces, especially in the technology space, and a lot more collaborations that you've seen constantly being announced between larger players and smaller players. I think the larger companies are looking to diversify, differentiate their portfolio away from a commodity, volatile, low-margin volume business, especially in fertilizers and in the chemical industries. I think there's a trend or a request for some of the startups to reach profitability faster, which is very difficult to do because technology and agriculture takes time. And I think investors are demanding more financial discipline. In regards to regenerative ag practices, the rule really is farmers are willing to pay and adopt into agronomic practices, but their number one goal is to have an economic benefit for their operation. They're small business owners. They do look for regenerative opportunities, especially if you take something like soil health. But I would say first priority is profit yield. Second priority is cost savings. And if they can get all three, it's great. We have an example where we invested in Emergent Connect, which put in connectivity into Terra Nova Farms out in the Valley in California. And the savings for the farm were $65,000 per year, 30% less water usage. So that's the type of thing that a production system, a farm would really likes. Now, saving 30% water in California is also a sustainability regenerative ag example. But really the momentum, I think, for the future is still that money is tight. It's difficult raising money. But if you have the right story, it's still there. As you can see, lots of money still changing hands. But there is a risk aversion, especially by venture capital, and also some of the strategic VCs. And they'd like to really pick up these companies at a later stage when they're working capital positive and at least making their first profitability. And there's a clear sign that the technology adoption on the farm is happening, meaning rapid growth rate. It's a lot of information right now in your first question, but that's what's going on.
What ag technologies within the crop input space are attracting the most investor attention right now? Are we talking AI-driven decision tools? Could be digital platforms for input management, drones, and can we get a little bit into about what's fueling that interest?
Yeah, so what are we looking at and what do we like? We like robotics, we like artificial intelligence, and we like digital. There are other deals that are on the fringes of that. Like I talked about the telecom connectivity, which is enhancing then, sensor technology on farm. But those are really the three areas that I like, and I think that investors are liking right now. A lot of that has to do with productivity, global competition, the need for farms to get their costs in right sized. Has to do with economy of scale, like labor issues that we see out there. They're going to continue. I was just saying to some farming friends of mine that as we see in some of these rural areas, some of manufacturing coming back into the United States, there's going to be a lot of competition for labor in the rural communities. While that is good for the economy and for the community, it will make it more competitive from a cost perspective and finding employees on farm. Drones and application machines, the difficulty there, I think, for the investor is that that's a one-time sale. So it's not really scalable, right? So unless it's, a big one-time sale, like the OEMs have when they sell equipment, for half a billion dollars, right? So that's very, very different, a very different story. Sorry, I meant $500,000, not $1 billion. I'm becoming a politician. Billions around like millions, right? So I think the other area that's continuing to attract a lot of attention is the biorational area because the growth rates are so high. And in many cases, it meets the regulatory standards as far as maximum residue limits. It also provides the farmer with a tool to do things where there are resistance issues, right? There you see also included things like research platforms, finding new active ingredients, quite a few of that out there, which is very exciting. CRISPR, RNAi, seed genetics, those things are still very, very high tech and becoming more, I would say, cost effective to manage, and therefore also providing tools down the road that are going to be easily adoptable by growers from an input standpoint. I mean, I'm talking about a cost perspective into their production system. The third area, which continues to be an attractive area, is that has to do anything with market access. So you've seen, a number of companies globally doing different smart business models to bring that technology to the market. So if you think about like biologicals, for example, it is such a high educational technical positioning that it's a different market access then, for example, if you're distributing bulk chemicals or bulk fertilizers, right? So it needs different business models. So there's an opportunity there also in the market. What's fueling interest really is really technology which is transferable, scalable among industries, right? And generates maybe a different income stream, like a subscription-based business. Now, farmers don't always like that because it becomes, part of their fixed cost. It's sort of like, when our subscription costs go up for watching Netflix, right? So, and yeah, but that's really where investors are looking, right? So you see companies like, the software digital business like Microsoft, because they're running that technology across industries, and agriculture just becomes a bolt-on and a growth area. So they like that. So that's kind of what's attracting attention.
Are there any underserved or overlooked areas in the crop input technology space that present real opportunity? And that could be bridging biological performance gaps. It could be improving delivery systems or even enabling better data integration on the farm.
Yeah, I think system integration as an attribute is huge, right? It's very difficult to do in agriculture because of I would say the micro segments, just the way, each farmer manages their business somewhat differently. Each retailer manages their business somewhat differently. One example for me, which I think still has great opportunity in agriculture, is blockchain and supply chain. Then I think there's great opportunity still in bolting on technology companies to scale faster. Also combining startups, we're going to see more of that to build new enterprises and technology companies. I'm looking at that, very seriously. I think that there'll be more prescriptive agronomics, and when you have prescriptive agronomics, and I'm talking about, let's say a agronomist was doing, 5,000 acres that he was looking after. Now he can look after like maybe 50 or 100,000 acres, right? From a productivity standpoint. So he needs the technology to enable him to do that, right? There's lots of information out there. The question is, can they adapt that information to make it an economic benefit for the farm? I think there's an area also which I'm seeing, which is unfortunate, but more and more bankruptcies, right? Therefore, you can pick up intellectual property, you can pick up certain assets, even human talent, which is out there right now because the agricultural market is in a funk. Then, sensor technology, comprehensive sensor technology. There's some companies out there that, I'm looking at, which, I think are going to bring, I would say, a portfolio of sensors to the grower, and he can then pick from that menu and adapt that to his farming unit. Resistance, is still an issue, and will provide, companies that do new research opportunities, anything that has to do with cost savings, because right now, farm profitability is not great globally, right? Until we get a balance between supply and demand, I think the end user, the farmer, is still struggling. I think there's a great opportunity as far as having smart business models, for example, for small farms like in Asia and in Africa. One that hasn't been tackled. If one can build a smart business model, I think that could be a great opportunity, but it's a long way off. So those are some of the opportunities, because there's quite a few out there.
Yeah, sounds like it. How do you view long-term investment potential in ag tech, particularly compared to other sectors? And do you see a global need for more sustainable, productive agriculture helping keep ag tech resilient, when it comes to broader economic shifts?
Yeah, we have to be realistic that in the overall, I mean, I mentioned at the beginning of our discussion, overall agricultural technology is just a small portion of the overall venture capital that's out there. I mean, we're not, talking about trillions, right? We're, talking about billions, but small billions, right? It's a small segment in comparison, like to the pharmaceutical segment or the high tech segment. If you talk about, chips and artificial intelligence, but that technology will also at some point in time arrive in the agricultural sector. So I think we just have to find a really smart way of building that into the agricultural markets. I think the startups are really what you see today, the ones that are doing that. There's just so many of them out there. It's hard I think, for the investors to know which ones are really the ones that are going to succeed. And that's really the trick. We look at it much so, we look at the management team, we look at the business model, we look at the financials in which state they're in, because sometimes they just run out of money. They might be really good people, might be really good technology, might be good business model, but they just haven't been able to attract money. And then, of course, what's very important is also that they have what I would call the number one asset value, intellectual property. Do they have patents, right? And do they have registrations? And it's not, the agricultural space is a little bit different than other spaces. We have to do biology. We have to get registrations. It just takes time. And, investors, are looking really to get their money back a lot of times in 3 to 5 years. Some of the funds go a little longer. They go 7. Some go even longer. They go 10, but that's rare, right? People want to get their money back fast. So I think that's a little bit different that drives our industry a little bit in different directions. From a sustainability standpoint, I would always say that, and maybe I'm a little bit, biased here, coming from the farming community. I think, most farmers take really good care of their land and of their community, because that's where they live. and that's where their children live. And they've been doing that for generations. Now, can they receive tools to do that better? We've substituted, hand weeding with herbicides, right? Can we find better herbicides that are better for the environment and for soil health? That's just the next step. So I think that's just the way, we evolve as a community. We just try to improve every day. But you also have to survive, right? You have to make money and be able to feed your family and your community. So it's a fine balance, I think. So is there a need? Yes, there's a need to improve constantly, right? It's got to be constant improvement, especially as countries compete with each other, right? I mean, let's face it, the Russians, the Ukrainians, the Brazilians, the Chinese, the Indians, the Australians, the Americans, they all compete if they're growing whatever crop they're growing, right? And whoever has the most economic, the best production system will probably survive, right, and thrive. And I mean, there's just this global competition. So I think, it really comes down to sustainability, comes down to first profitability, but, doing things in the right way. But I think farmers will never reject that. They will always embrace that. I'm not so sure it's a need. I'm not so sure it's really a demand. It's just something that's, I think, a natural evolution that's going to happen. Some of these things that are needed really do need some governmental subsidy. I mean, I'm a free market guy, but sometimes you need something to ignite a usage, like a tax incentive. We saw that in the biofuels area, right? I've been talking years about if we want to get more from a U.S. perspective, not a global perspective, but in a U.S. perspective, more into the carbon trading market, which is a great potential for farming globally. We can certainly, but you do need the government to invest in things like MVRV systems and companies and startups, right? There needs to be a very focused approach to scaling those type of businesses. Having, when we use the word sustainable agriculture, I always think about soil and soil health, which is one of my pet peeves. I mean, it's the number one asset for a farmer. It's what he hands down to his children. It's what his family has done for hundreds of years. And he has a passion for that, but it's also, as technology is hitting him every day, he has to decipher that and say, okay, what really works on my farm and what doesn't work on my farm. He doesn't, and that's a tough job for a farmer. So I think there needs to be a lot of education. Fortunately, like for example, in the United States, we have the great universities. And I think sometimes we ignore them. We should be embracing them more and funding them more. So that's kind of my 2 cents to that, Lauren. So,
Well, thank you so much, Bob. I mean, as always, these are great conversations. Is there anything else you'd like to add to this? Any final thoughts or anything you'd like to add?
No, I'm looking forward to the Global Trade Summit and meeting all my friends and colleagues and having, further discussions. I always enjoy the articles that you guys publish. There's always nuggets and new ideas, and just want to thank everyone who listened to this. Hopefully you gain some inside knowledge into my thinking, and hopefully if you have a few things to add, I'd be happy to receive those comments. And so thank you very much for your time.
Thanks for listening to AgTech Talk by AgriBusiness Global. Stay connected with the latest in ag tech and crop protection by following us on LinkedIn and visiting agribusinessglobal.com for more insights and updates. Until next time.